If you're waiting for a 5% dip in the stock market, you got it today, because the S&P 500 is down around 2% as of this video, and the mainstream media is really talking about this Evergrande situation, the Chinese real estate company that essentially can't service its debt, and it's causing fear in the markets. Now, a lot of other content creators have talked about this situation, but I just wanted to add my 2 cents and talk about the potential ripple effects that this whole situation could cause. First of all, clearly the markets did not listen to my video yesterday about the strong resistance at the 50-day moving average. This morning really just blew through that, and we're seeing the RSI approach 30, which is closer to a true oversold situation in the SPY. Also pair that with the volatility exploding to the upside, which really means uncertainty is high in the markets. And so you have the Fed meeting coming up. You have this Evergrande situation, which all of a sudden everyone's concerned with. For me, part of the 5% pullback could be fueled by this speculation around the Evergrande situation. But also, these 5% pullbacks can just happen. So this is just kind of adding, I would say, media fuel to this downside move. But I like to see when the VIX really spikes and that uncertainty spikes, that's usually the best time to start buying stocks because things go on sale. So as long as this isn't some type of crazy black swan event, usually things cool off and you kind of recover after this spike in uncertainty. So it really comes down to, do I think this is a black swan event with the Evergrande situation? So let's dive into the overall problem that we're seeing out of China with this company. If you're not familiar with this company, they are involved with real estate development and they are heavily exposed to the China market. With this company right now, what's happening is that it's been exposed that they're over leveraged and they can't essentially service the debt that they've taken out. And the fear is that they would default on that debt and there would be a ripple effect in the real estate market, as well as ripple effects throughout the economy of China if they default on that debt. They basically warn that there's around $305 billion worth of liabilities that could be at risk right now based on the company's balance sheet. So this really could cause a liquidation event where the company has to sell the real estate at lower prices and kind of flood the market, which would take down other real estate companies, and it would hurt investors in these companies, and maybe those investors have to liquidate other assets. If these companies are employing people, all of a sudden those people are unemployed, and all of a sudden they can't spend as much money as they were before. So it really comes down to this whole trickle effect. If a company with this much debt defaults on it, and all of a sudden it really hurts a wider category of people than just the company itself. Now, there could be some solutions where essentially the government comes in and bails them out and says, hey, well, service this debt. They could also extend the loan period, or basically say, hey, let's restructure this debt so we can pay it off at a slower pace over a longer period of time. So there's a lot of things that they can do to potentially head this off. And that's why, in my opinion, I don't think this is the end of the stock market and Evergrande and this whole situation is going to take out the whole market, because I think we've seen this already happen with the US market and the whole 2008 situation with real estate kind of crashing down. And since that is already out in history, you can kind of see how that can be solved by kind of intervening. Now, the question is, will the Chinese government kind of do that, or will they ignore it and kind of let this company fall and just deal with the consequences? In my personal opinion, I think the government would intervene if it really started to show that there was ripple effects. I think if the people getting hurt are foreign investors, the Chinese government could care less. We're seeing all of the losses with stocks like Alibaba, Didi, any Chinese tutoring companies. Any of these companies have been getting hammered with regulation from the Chinese government, so they could really care less if people from other countries are losing money. But I think the government in China really wants to protect their own economy. So if it's hurting their own people and their own economy, they may intervene. I think also one important distinction between 2008 and this current situation is the fact that the company that went under in 2008 for the US was a financial institution. So they had $619 billion in debt. When that got liquidated and this company essentially went out of business, this had a bigger effect on the overall economy versus just the real estate company that maybe took out too much leverage and then can't pay back on that debt that they took out. And according to this Reuters article, most of the debt is owned by mutual funds, ETFs, so mostly investors and not other banks or other financial institutions that will see a bigger ripple effect, just like Lehman Brothers. Overall, the situation obviously isn't great, and nowadays with it being a global economy, if the Chinese economy basically tanks, that can affect the US because a lot of US companies are global and they're making money from China, whether that's production within China or actually bringing in revenues from China. The impacts of what's going on the other side of the world can in turn have impacts on the US stock market. One example of this ripple effect is that with real estate development and industrial activity going down, you have a flood of steel products going to other countries. With the Chinese government, all of a sudden they can dump cheap steel across the board, and this can affect companies that are on the other side of the world that make steel. So that's part of the reason that we may be seeing companies like Cleveland Cliffs get absolutely hammered, or even companies like Caterpillar that makes industrial equipment and machinery also get hammered, because once again, this is a global company. And especially bigger players like Apple, who have continued to grow the revenue in China and has been a growth engine for the company. So obviously not great news to see that China potentially could have issues with their economy. And on days like this where the entire market is tanking, well, fear takes over, and even if your company isn't involved in China in any way, it can also get taken down. Also, I don't think it's fair to entirely blame today's down move or the general down move over the past couple of days to Evergrande alone. I mean, you have other situations that are on the horizon, whether that's the Fed meeting talking about tapering, or you have the situation with the US debt ceiling, you have inflation going wild. So there's all these other things that are also at work, and when you pair this kind of fear about the Chinese situation, all of a sudden that can spike the volatility and get the market to sell off a little bit. I think it's also important to reiterate that 10% pullbacks is completely normal in the scheme of things. So having a 2% down day may be scary, the VIX spiking may be scary, but these pullbacks as a long-term investor, as always, provides opportunities, because this is when I can reposition my portfolio into higher conviction, maybe faster growing stocks versus some of my slower growers. I can take some of those companies, sell that off, and move it into some faster growing companies that I think are still fairly valued or way undervalued. Usually when these huge pullbacks happen, I kind of see it as an opportunity. If you guys did enjoy this video, make sure to hit that like button and consider subscribing to Main Street Wolf, where we talk investing, stocks, anything to do with money. Thanks guys for watching, and have a great day.